Hello traders, this is the continuation of the video that we are calling wave theory. The first video was a zigzag correction, the second video is zigzag correction tips, and the third video is a classic flat correction. In this fourth part of the series, we will talk about expanded flat correction. But before I continue, if a trader wants to know more about flat corrections, one must go to www.24elliottwave.com and click on flat corrections. Okay, click on a page that we call flat correction. But in this video, I will give a little bit information, things that trader must know, talking about the wave theory. The expanded flat correction, according to the theory, we must always separate the theory from the reality of the market, using the trending triangle, and understanding that the wave pattern is a fractal pattern. Alright, very, very important. So, the formation for the expanded flat correction is 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, 3, 3, 5. A strong trend is completed, a motive wave is completed, price pulling back 1, 2, 3. A shallow correction. Normally, the A corrective wave of the expanded flat correction is a shallow, because the previous trend was very strong. So price tried to go down. You see, it's a shallow. It's in a horizontal channel. Then the B corrective also is a shallow. So you see, not too deep. Price find it very difficult to go down. The volume is very, very low. Less people want to challenge the previous trend, so to speak. All right, but it is a double correction, because a double retracement. Price went down, shallow, and when the same distance again up, double correction here. For the classic correction, as we have discussed, the C correction, though it's divided into 5 waves, will stop just a bit below the A corrective wave. Now, what's the difference between a classic flat correction and an expanded flat correction? In the case of an expanded flat correction, instead of the price staying in the horizontal channel, as we have seen for the classic flat correction, the price will come out of the horizontal channel. So, price will stay in the horizontal channel for a while, ABC, ABC, and then 1, 2. But then it will break out of the horizontal channel, as we have seen here, a typical example for Pfizia. This is an expanded flat correction. And we continue to move to the downside. As I explained to traders, if one wants to know more about the flat correction, one must click on the page that we titled Flat Correction. What is taking place? Now we're going to explain to you what is taking place. Very often, when we see the price in a horizontal channel, it means that there is a balanced market. So, neither bull, neither bear are controlling the market. It's equal force. So to speak, this is again another theory. Now, according to Elliott wave, when we see 3 waves after an impulsive move, it's a correction. But then we see 1, 2, 3. Normally, after a correction, we should see an impulsive move. So we see again another 1, 2, 3. So we say to ourselves, it's a correction again. It's a double correction. Now, and then the price starts going down. If the price is going down, the price is looking for a better support level. Alright, the inverse is true. Okay. Now, so price start going down, price is looking for better. So the mistake that a lot of traders are making, they just ignore the support level that are here. Do not ignore them. So the best strategy, you sell, you roll it down to the next support. You may secure your gain or take some profit and go away. Let it break below. You see here? Can you see it? Yeah, it will give you another choice. See here, you break below the blue line again, and you try to retest it here. A lot of traders that are using moving averages get whipsaw because they don't understand what the price is doing more than 70% of the time. Traders that are using moving average get into trouble. They whipsaw, whipsaw. To avoid whipsaw, one must understand what the price is doing all the time. Price roll it down. Don't chase it. During that time, you see a lot of moving average going down, and then it cross again above, and then cross it below. Let it grow, break below, retest here. Okay? So, you were selling before, price approaching the first and nearest support level, just take some profit or secure those gains. Wait, again here, roll it down again, let's change direction. So the expanded flag correction will break out of the horizontal channel. If that's happened, what traders should do? Talking about wave genius, you will project the channel, the horizontal channel. So we are waiting for a classic flag correction. As your traders see here, price start going up. You say, Joe, thank you very much. 1, 2, 3, 1, 2, 3. You roll it down here. This is a classic flag correction. So you start buying here, very happy. And you think that it's going to go up now to display ABCD chart pattern. If you fail to check the fundamental, if you don't check the market cycle itself, if you don't know what is taking place, the fundamentals very important if you want to remain in the market for long, unless you are just scalping. All right. Here the fundamentals are weak and Pfizia went down. If you break below the channel, project the channel to the other side. So here you see equal size, we project that channel, okay, to the downside. Equal size, you see, almost equal. Yes or no? Yeah. Do you agree? See the channel on top? Yeah. You see, this is about wave genius. If you have never watched the video, I put only one video on that page. So this is the horizontal channel that we have before, defined by the 1, 2, 3, 1, 2, 3. That now we have it. If these 2 points and this one here, 3 points we need to do, just 3 points we need to draw a channel. 1 point, 1, yeah, 1, 2, 3 points. Okay, we have our channel ready. It came out of it, we project it. Look where it stopped. So to know where the expanded flag correction is likely to stop, trader will use Fibonacci extension, but the market pattern is powerful. So there was a horizontal market pattern here. Price come out of it, talking about wave genius, ladies and gentlemen. Project equal side of the channel to the other side. Look, stop on it on the dot. So you will be watching it as it break below and you sell it here, blah blah blah. You see, that's why I like TSCWSY0A, because you tell me that now come out, now come out, now K in, now come out. It's better that way instead of just forcing it and expecting for miracle. Traders that sold it here, if here they were lucky because the price can come up again. Okay, so suddenly it went down. But to set a target for the end of the fifth wave, for the end of the expanded flag correction, one can use a channel projection. All right. If we come out of the second channel, we will project again to the downside, third time, somewhere here. Okay, equal size, should be exactly the same size as the previous channel, steadily. It's powerful all the time. All right, so one tips for traders talking about expanded flag correction. The expanded flag correction will break below the classic flag correction channel. As it breaks below it, we will project that channel to the downside. Though the formation is the same for the classic flag correction and the expanded flag correction, 1, 2, 3, 1, 2, 3, 5. The expanded flag correction is extended beyond, far beyond, okay, the end of the A corrective wave. In the normal classic flag correction, it will dip just below it as traders were expecting it here. Another thing I need to mention to traders here is that when we are counting the wave, the market is dynamic. One does not know what the price will do next. One can forecast, one can estimate, one can project, okay? One can expect. Until it's completed, it's not there yet. So, I mean, it's not a sign. Human beings can change their mind 1 minute like this. If there are some crazy economy news, or the Fed came with a change of policy, boom, things can change like this, all right? So don't trade expecting that, tell me exactly what to do, and I want to do that every day, doesn't matter, and I will believe you. I don't need to tell you anything that is exactly the same every day, because nothing remains intact in this messy market. Dynamic is changing, and human being must make decisions. Keep eyes on the ball, adjust. If it's too much, come out, all right? And look again steadily, all right? It's just a risk, all right? It's about risk. Recently, JP Morgan lost more than a lot of billions of pounds or billions of dollars, okay? So it's always there. So we will project it to a downside here, all right? So we know 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. The expanded correction will go far away from the end of the A corrective wave. All right, the A corrective wave of the expanded correction. We go further down. We'll use the channel projection to know how far the price will go. As always, when you're about to enter a trade, we must always check the fundamental and use the trading triangle to make excellent decisions. Sometimes you see here the price touch it here, it just go away. Sometimes it may not. It may go up like this and then come back below it. If there are more fear, there was one example talking about Hewlett-Packard last year, which I talked about already. And if there's this kind of litigation of fear or something hanging on the company, and you are not aware of it, you are just forcing it, you become emotional. That's not the right way. You want to dig it and find out. If, for instance, a cycle has begun here and then suddenly you were expecting it to go for a long time, and you suddenly everything's going down again, wonder, chance to see, have I missed something, all right? This is just very important, okay? So to summarize this video, the difference between an expanded flat correction and a classic flat correction, the expanded flat correction, we break out of the normal horizontal channel, and we can use the projection of the channel to determine how far the expanded flat correction will go. We will also combine the technical and the fundamental using the trading triangle and understanding that the wave pattern is a fractal pattern. So for instance, here we see here 1, 2, 3, 1, 2, 3, 4, 5. We are now on the monthly chart, okay? So we see like this. We are sure that this is what we see. We do not stop here. We must investigate. Okay, check the yearly chart. If you can see even a 3-year chart, if you can see more data, look at it. Sometimes you'll be shocked. You may see like this, and you see a different time frame. You may just scrap everything and know that it's not adding up, because after looking at the bigger picture, you have seen something else. But while we have seen a lot of ordinary area wave traders go to the daily chart, especially daily chart, they count the wave, they say, okay, George, there was a trend in 1, 2, 3, 1, 2, 3, this is blah, blah, blah. But that's only a piece of the information. You want to, okay, zoom into it, zoom out of it, and see everything all together. I hope you have learned something from this video, but if you want to know more, go to www.24ElliottWave and click on the flat correction. We are the TSTW SYS008 traders. I'll speak to you soon.